It's 2026. Will your paycheck go up this year? Well, CPP is going up, but taxes are coming down. So for most Canadians, yes, you should see a small boost in your take-home pay. Hey guys, it's Adrian here, the Canadian in a t-shirt, and I'll break down the changes to my pay stub for 2026. I'll share all my numbers, income tax, CPP, and enhanced CPP. I'm a good example to use because I keep my salary fixed every year. That way we're comparing apples to apples. We're not talking huge savings here, but already I'm seeing an extra $22 each paycheck. I'll take the win. This is a series I started 3 years ago, back when I was still wearing glasses, so it's time for an update. Follow along and look at your own pay stubs and compare them to last year. Just make sure you're comparing January to January. Don't compare January to December. Your take home will be higher at the end of the year if you max out your CPP. Now in January, new year, so CPP starts over again. I'll break down CPP in a bit, but for now, let's start with EI, employment insurance. The EI rate is actually going down this year by 0.01%. The rate is decreasing from 1.64 to 1.63%, but the maximum threshold is increasing. So for the total year, the maximum amount you'll pay into EI will go up by $45 or $1.75 per paycheck. And that's only if your salary is above $68,900. So it's barely a change. For my company, I'm the only employee, so I chose to opt out of employment insurance. That's why you won't see EI on my pay stub. Take a look. Here is my pay stub from last year, January 2025. I break down all these numbers in detail in my longer video, Paystub Explained. Link down below to watch that. But these are the most important numbers. I pay myself bi-weekly. That's 26 paychecks in the year. I give myself a salary of $90,000. I've kept it fixed at $90K for the past 5 years. 90,000 divided by 26 paychecks gives me a gross pay of $3,461.54. That's before taxes and deductions. I choose not to pay into EI, and I don't have any health insurance or employer benefits, so my pay stub is very simple. Just gross pay minus income tax and CPP, Canada Pension Plan. You'll notice 2 lines for CPP. I'll get to that later. Subtracting these numbers, I get my net pay, $2,575.21. That's how much goes into my bank account. Now let's see my latest pay stub in 2026. Right away, you'll notice that my take-home pay went up this year. That's because taxes went down. My salary stayed the same, but my income tax, combining both federal and provincial tax, went down by $22.04. And so my take-home pay went up by $22 each paycheck. It's not life-changing, and with inflation, rising cost of living, that's a whole other story. But on numbers alone, yes, our taxes are going down this year. I have a whole video breaking down all the tax changes for 2026, so check that out, very important. But quick summary, this year we're all getting a tax cut of 1% on the lowest tax bracket. This is good because we all benefit. It's not just a tax cut for the rich. Now on top of this, the tax brackets themselves have expanded by 2% to match inflation. That means that more of our income is taxed at the lower tax brackets, less tax overall. The basic personal amount also got a boost of 2%. This is a tax credit which helps all Canadians. For 2026, it went up to $16,452. Basically, we don't get taxed on the first $16,000 of our income. Back to my example, my income tax decreased by $22 every paycheck. So for the whole year in 2026, my tax bill will go down by $572. That's good news, but the story's not over. There's also an increase to CPP, the Canada Pension Plan. For 2026, the CPP rates are unchanged, but the limits are increasing. So for higher incomes, you'll pay more for the year. Like last year, we now have a second level of CPP. That kicks in if you make above $74,600. I won't go through all the math. I already break it down in this video right here. But here's the bottom line. If you make less than $71,000, no changes for you. You'll get the tax savings I got, about $20 per paycheck, with no increase to CPP. But if you make above $85,000, you're gonna pay the max amount of CPP, $4,646. That's $216 more than last year, an extra $8 per paycheck. Note, we're not actually paying more CPP each paycheck, it's just gonna take us longer to max it out. See here in my pay stub. I'm still paying the same amount into CPP, $197.95 each paycheck. It's the same as last year. But for the whole year, I'll pay an extra $216, so it just takes a few extra paychecks to reach this maximum. Take a look. Throughout the year 2025, I was paying $197 into CPP. Then in October, I maxed out the first level of CPP. Notice here, it went to 0. Now I started paying the second level of CPP. That only kicked in once my income reached $71K. From then on, I was only paying $138 into CPP 2, so I saved some money. That kept going until November, when I fully maxed out CPP. At this point, I stopped paying into CPP, and for the rest of the year, I got a really nice bump in my paycheck. Then, in 2026, CPP reset, and I was paying $197 once again. For this year, I'll see the same thing play out, except that it will take me an extra paycheck or two to reach this new CPP limit. So I'll see a small bump to my take-home pay around October and then a big bump in early December once CPP is fully maxed out. Regardless of your income, our taxes are going down this year and we'll save more in taxes than we'll pay into CPP. So yes, your take-home pay will increase in 2026. For more tax savings, watch the rest of my Canadian tax guide, my silver colored videos. Link down below. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.